Welcome to Explain the Charts. Today, May 15th, 2025, we're diving deep into GBPUSD, combining news analysis with a technical chart review. Recent GBPUSD news highlights the pound sterling's struggle above 1.3400, cautious stances from the Fed and BoE, and U.S. tariff uncertainties. We'll also examine the UK's Q1 GDP exceeding expectations and potential BoE rate cuts as markets price in a high probability of cuts by August. Let's start with the daily chart. Looking at the last several months, we can see GBPUSD experienced a significant dip around April 2025, bottoming near 1.23. However, it has since recovered, showing a general upward trend, especially in recent weeks. More recently, in May of 2025, the one-day chart shows the price is around 1.326, but on a very bullish candle, which may indicate strong short-term buying pressure. Now, let's correlate this with the news. The recent rise aligns with reports of stronger-than-expected UK GDP data, reducing BoE rate cut likelihood, which has supported GBP. However, remember that analysts at FX Street noted that a strengthening USD, influenced by the Fed's cautious approach and the Trump administration's trade policies, could exert downward pressure on GBPUSD. Looking at the daily chart again, a potential resistance level appears around 1.34, the high from earlier in 2025. A break above this level could signal further bullish momentum in the longer term. For a more granular view, let's switch to the one-hour chart for a recent week. We see more short-term volatility, but a relatively stable trading range. Focusing on May 12th to 14th, we see GBPUSD bounced between 1.317 and 1.330. On the 15-minute chart, we see ranging between about 1.3304 and 1.3255. Now, let's recap important price levels. A key resistance to watch is 1.34. A break above could signal bullishness, while holding above 1.314 could lead to a retracement of the decline from 1.3403. Failure to hold above the 50-day SMA at 1.3109 could push it towards 1.2709. Given the economic headwinds, a BoE interest rate cut could pressure GBPUSD downwards, but a stronger-than-expected economy would cause it to rise. The likelihood of further upside depends on U.S. fiscal policy and whether the UK can sustain its recent growth momentum.